Thank you for joining us and welcome to Business Incorporated. I'm Chimeze Obi Iwagu. On the show today, Moody's affirms Nigeria's B2 ratings and maintains negative outlook. And Moody's sees South Africa GDP shrinking 2.5% as coronavirus shutdown weighs. Plus, IMF to give $11 billion to 32 African nations in virus fight. We begin with the intraday numbers, and the markets here in Nigeria continues to rise. At intraday, the all-share index was up 0.24%. The JSE index in South Africa was also up 0.60%. In Egypt, the EGX 30 was down 1.93%, while Kenya closed positive on Wednesday. And most Gulf stock exchanges fell further at intraday on fears that the world is in its worst recession since the 1990s, while reports of a persistent crude oil oversupply and collapsing demand added to the worries. Saudi Arabia's benchmark index declined 2.67%, with oil giant Saudi Aramco shedding 1.3%. Qatar's index fell 3.11%, with most stocks trading lower. In Dubai, the main index lost 1.96%. The Abu Dhabi index was also down 3.83%. First Abu Dhabi lost 2.2%, and Telcom's firm Etisalat retreated 1.3%. In Europe, markets advanced in early trade as investors digested the economic impact of the coronavirus on the global economy and countries begin plotting an exit from lockdown measures. Let's bring in Annette now. Hello, Annette. Good afternoon. Well, Eurozone periphery spreads are rising again. Should investors be worried?
Well, actually, if you're a bond investor and you're buying into Italian debt, you probably might have a reason to be worried, because clearly what Eurozone finance minister decided like last week, that no way there are going to be joint bonds in the Eurozone, so-called Corona bonds, and that would take the pressure away from Italy. The IMF is estimating that the Italian debt ratio to GDP will jump to more than 150%, which is far higher than during the debt crisis, meaning that the sustainability of that debt level is really questionable. And the ECB is doing whatever it takes to actually rein in those yields, but we are seeing that they are, despite all the efforts, are not very successful in doing so. The ECB currently, or for this year, I should say, is planning on buying more than 1 trillion euro in assets, and especially in last month, they bought more than 1/3 of their sovereign debt purchases in Italian debt, and despite that, yields are on the rise, because investors do have concerns that Italy will have a sustainability problem when it comes to their debt.
Now, we've seen shares move up on hope that Europe's economies could reopen soon. Germany is the latest to set out a roadmap for how it will reopen its economy. What's the plan?
Well, Germany is more or less the first country, or the first big country, saying that there will be first steps of easing the lockdown measures, but it's really very gradual. So what Angela Merkel yesterday in a press conference announced is that from Monday onwards, shops which are not bigger than 800 square meters are going to reopen by Monday, meaning that at least some retailers will feel some relief from these measures. But if you're talking about restaurants, bars, theaters, that will all remain shut until further notice. So there's no real plan to reopen that part of the economy. But what one can fairly argue that it is a step-by-step approach. So what Angela Merkel said, that the government literally looks at the situation and how the virus is spreading every 2 weeks, and then decides on the basis of that whether they can ease the measures any further. But going back to the normal, like we knew it before the crisis, this is not foreseeable, at least not in the foreseeable time horizon. There are some promising news also from the car makers. For example, Ford is restarting its German plant at the beginning of May. So one could tentatively argue that business could actually, sort of at least start to plan to go back to normal production levels, or at least start to produce once again, especially when it comes to the car makers. So we're far away from normal, but there are steps to get, sort of the lockdown a bit, or that we are easing the lockdown measures a little bit, at least in Germany. Other countries in Europe still are in full lockdown.
All right, economic data is weak across the globe. The Asian growth to grind to a halt for first time in 60 years. And IMF says economic slowdown will be worse than 2008 global financial crisis. How are these projections being digested where you are?
Actually, it's interesting because the stock market, of course, is always anticipating the future. And there are like the likes of Goldman Sachs, at least today, we're stepping out and saying the equity markets are far too optimistic about the shape of the recovery. They went far too high given the negative economic scenario. And if you look at the bond markets, they're pricing in a lot more realistic. So to answer your question, I guess the equity markets are still like trying to close the eyes when it comes to the anticipation of what it really means for earnings, what it really means for the economies. If you look at what the IMF says about Asia, Asia being the powerhouse of the world economy, it is very lackluster. If China is expected to grow only by like some 1.2%, I guess that's what the IMF is saying. Also India just barely growing, like these big countries and big economies who are normally boosting demand for the world economy, then we know we are headed into a very difficult year, and that also will be, has to be mirrored in corporate earnings. Talking about corporate earnings, that is already, we already see it in the first banks publishing their quarterly results in the United States. It will be a very dire scenario when it comes about to the economic outlook, and we most likely won't talk about a V-shaped recovery. That's what the IMF is also saying.
Let's just hope we get out of this as soon as possible. Thank you for your time, Annette.
Thank you.
And in the UK, we saw a mixed sentiment in the equities in the morning, while the pound was in the red against other currencies. Let's see what has changed since then and more. Let's bring in Juliana now. Hello, Juliana. Good afternoon. Well, let's start with the intraday numbers. What's the update and what factors are driving sentiment?
Good afternoon, Chimese. Well, there was a bright start on the FTSE at early trading, and I think that had much to do with the fact that some traders are looking forward to an ease in lockdown. We're expecting an update out of the UK later today. But at intraday, they haven't maintained those gains. A lot of that is to do with gold. The safe haven gold's prices are really rising at the moment. So at intraday, the all share is down 0.09%. The FTSE 100 is down by 0.26%, and the FTSE 250 is down by almost 0.5%. In currencies, the pound is also down on the dollar by 0.31%, just slightly down on the euro by 0.03%, and down on the Japanese yen by 0.11%. It's worth mentioning that even though oil prices are rallying at the moment per barrel, BP, Royal Dutch Shell are both down by just over 1% at intraday.
And EasyJet is already putting plans to ensure social distancing while flying. The airline plans to keep the middle seat on its planes empty once the COVID-19 lockdown has been lifted. But will that encourage more people to fly?
Well, that's a multi-billion-dollar question, Chimese. It certainly will encourage me to fly, but I'm not sure about anyone else at the moment. I think one of the mental health issues that are going to arise from these lockdown measures, particularly in the West, is starting to become of grave concern to consumers. And that's really because a lot of people are still very, very worried, which is why there are some opposition MPs that are asking governments to start bringing out phases, start discussing with the public just how they're going to get themselves out of the lockdown. Now, we know the aviation industry has been completely wrecked by this global pandemic. Many of them have shut down their services as, of course, borders have been closed. But EasyJet, they want to be first off the mark. So when these lockdown measures are removed, they're hoping that they'll be able to encourage some of their passengers to start flying again. by allowing that middle seat to be free. And if you are somebody that travels in economy, then you'll be happy to have that space because, of course, especially on a budget airline, it can be really tight at times. So they're seeing that as a good sign. They hope that it will encourage people, but it has sparked a wider discussion about how a lot of these brands are going to have to remarket themselves to make them tell customers that it will be safe to travel with them. Because, of course, we are starting to see in some places a resurgence of the coronavirus, a spike, and many people will not want to fly if they're at risk of getting quarantined when they get to another country. But EasyJet first off the mark there.
I can imagine how that would play out. Anyway, Eastern European farm workers are being flown to the UK on charter flights to pick fruit and vegetable crops. It looks like UK farmers are overwhelmed by demand on farms.
They absolutely are overwhelmed. We've seen it started with all of that stockpiling as soon as Prime Minister Boris Johnson announced a couple of weeks ago that people would be working from home, and then they increased it to a full lockdown. And supermarkets are really struggling. There's lots of demand at the moment, particularly as we're changing seasons. We're now in spring, and typically you would have about 100,000 pickers, as they're called, coming into the UK from across Eastern Europe. But that, of course, has dramatically changed because of the pandemic and crisis that we're in, and borders have been closed. There were campaigns trying to get a lot of people who have lost their jobs in Britain to come onto these farms and start picking fruit and vegetables. And there has been a spike. There has been some applications, but just not enough because 100,000 are needed. So the farmers' unions have said they need about 70,000 workers. And what they've now done is they have allocated these chartered flights, these special private planes that will be taking people from Romania into Stansted Airport over the next couple of weeks. I believe the first one may have landed actually now, of about 180 individuals. And yes, what they'll be doing is making sure that British supermarket shelves are stocked up. It's interesting, as soon as this story broke in the morning, there was some controversy. There were some right-wing media outlets that were trying to say, oh, we've got the Eastern Europeans coming in again. But, this is a good story, really, particularly as so many people are struggling to get what they need from the shelves. And the fact that we've got these workers that are coming in, considering there is a global health crisis at the moment, to help keep Britain eating is only can be seen as a good thing.
Well, let's continue to follow up on those developments there. Thank you. Enjoy the rest of the day, Juliana.
Thank you.
And stocks in Asia were mixed today as concerns over the scale of the economic fallout of the coronavirus pandemic continued to weigh on sentiment. The Nikkei 225 in Japan fell 1.33%. The Topics Index dropped 0.82%, and South Korea's Kospi closed flat at 1,857 points. Mainland Chinese stocks edged higher on the day, with the Shanghai Composite up 0.31%, while the Shenzhen Composite gained 0.47%. Hong Kong's Hang Seng Index dipped 0.51%. In Australia, the S&P ASX 200 fell 0.92%. Overall, the MSCI Asia ex-Japan Index slipped 0.61%. And futures contracts tied to the major U.S. stock indices recovered earlier losses and pointed to opening gains ahead of key jobless claims data. In early Thursday morning trading, Dow Jones Industrial Average futures rose 227 points, implying an opening gain of about 228 points. S&P 500 and Nasdaq futures also pointed to higher opens. Earlier, Dow futures had fallen more than 100 points. The overnight moves followed a slump during the regular trading session on Wednesday as gloomy economic data and anemic bank earnings fueled concerns over the coronavirus impact on the economy. And after the break, Merge Exchange becomes world's fastest growing stock market. Do stay with us.